Hello, so if you've been struggling in the markets recently or you're trying to find a successful strategy for trading in general and you've not a successful profitable trader yet, then I've got a strategy for you. I'm going to show you what it is and then I'm going to show you some examples of trades that I've taken recently. I've seen a lot of people struggling to trade at the minute in the markets, whereas I've had a pretty much 100% win rate over the past few months. And it's really simple and it's really easy. I think my trading strategy is probably one of the easiest ones on the market, but super successful. And I'm just going to show you what it is. So as always, I appreciate you being here. If you do want to get alerts for my trades, you can get them in the description below. And I'm going to show you what I do. So basically, let's just say this is your market structure. Pretty simple stuff. At the start of every day, and I do post these in my private Discord. If you want to get all the access to that, you can get it down below. I'll just go through and I'll mark out all the really obvious swing lows like this. You know you could do this yourself. This takes like 5 seconds. It's really easy. Literally, I do this 30 seconds at the start of every day. Post it in the private Discord so people can see where I'm trading from. And then very simply, I am looking for sweeps of liquidity and then inversions back to the upside. So say we come down, we sweep these lows here. You can see lots of liquidity swept. And I'm looking for inverted fair value gaps back to the upside. Really obvious, simple stuff. Anyone can do this. If you don't know what a fair value gap is, it's basically a 3 candle pattern in the market where price comes down quickly like this and creates a gap where price hasn't been retested yet, as you can see here. I'll show you some examples of this later, so don't worry if you don't fully understand it. But the best trades that I've taken recently are using this strategy. We sweep liquidity and then we create a fair value gap like this. Say this is your liquidity sweep here. And then what you get is this beautiful 3 candle pattern V shape back over the fair value gap like this. Let me just draw that a bit better so you can... I want to make it straight. It's really difficult to draw these straight. That'll do. So you can see here we've got our 3 candle pattern V shape. So you've got your fair value gap. You go 1, 1, 2, 3 back above the gap. These are really strong reversal patterns in the market and they do really well for me. And then my strategy is very simple. I enter on the inversion back to the upside. You've got your liquidity sweep. You've got your inverted fair value gap, which is what people call them. And then I'll enter on the inversion. I'll target a 1-for-1 like this. For sizing, I trade 25 accounts copy traded and I risk about $150, $200 per trade. So I'll size for about halfway between the gap and the low like this. And then if we come down and close below the gap, I'll consider that a loss and I'll close for about $200 loss on my accounts. But generally speaking, I don't even remember the last time that I didn't hit a 1-for-1. So we come up, we hit our 1-for-1 like this, for example. So we go sideways or whatever, and then we hit the 1-for-1. I'll take half my position off here, which is $100 profit, and then go break even on the rest of the trade. And usually, if I'm wrong, we'll go down and hit the break even basically straight away, and you'll consider it just a short-term retracement before the market continues down. But if I'm right, usually what will happen is price will just continue and sweep up through liquidity. So say for example this is that same trade there. I've obviously got my 1-to-1. We come up, hit my 1-to-1, we go break even on the rest, and then price just does this and goes all the way up. I'll just have runners at this point, little parts of my position left, a micro or two that I'll just leave to run up through liquidity. And this is my strategy. It's very simple and I've had a really good success rate with it recently. It works the best on the 3 and the 5 minute because they've got more data baked into them, and I've been having a really good time trading this strategy. So I'm going to show you some examples now of trades that I've taken recently. I've taken no trades this week so far because, as you can see, we've had some pretty spicy price action. We had a 1,000-point pump pretty much on Monday and then a 1,000-point dump on Tuesday. And obviously when we're on really bullish trend days like this, my strategy, I can't get any trades because there's no liquidity sweeps here. You can see pretty obvious. When we're just pumping upwards, there's no liquidity sweeps. I only take longs because I found my win rate with shorts is significantly lower. For whatever reason, maybe it's just me, maybe it's just the market is bullish coded, I don't know. So I just take longs. So when we're on bullish trend days, I don't take any trades. It's that simple. But obviously on bearish trend days, it's difficult to gauge whether or not sometimes when you drop like 500 points open here like we did, whether or not we're going to get ourselves a trade. Because obviously we've come down here, we've swept a pretty obvious area of liquidity here. because this is just a huge void of liquidity, basically. We've come down, we've swept, just about swept this. Actually, we didn't sweep this area here, because there was, a lot of people took a loss on this 2 minute here. You can see we obviously, there was a 2 minute here. This was the one. You can see we swept this level here. We're obviously in discount. We've dropped a few hundred points. And a lot of people took this long here. And I didn't take this because even though this is a nice 3 candle pattern V shape, as you can see, I just didn't take this because I didn't like that. I didn't think we got enough of a sweep of liquidity. And if you look at this, we're basically just, we've come up, we've sold through all of this, and basically there was just so much more liquidity below that we were going to come and hit, in my opinion. So I basically just didn't take it. No idea why this is, but obviously you can see this would have been a loss. So I actually avoided a good loss there, which was nice to see. But basically what we're looking for is, like I said, we're looking for 3 and 5 minutes mostly after big sweeps of liquidity. So let's take a look at last week, because I did take a few winners last week. You can see here, there was on last week was a very, very strange week in general in terms of price. Let me just go on MNQ so I can move, so my alerts aren't in the way, because they must be confusing. So I'm going to look at the last week of price action before. So which one was it? Was it this one? Here we go. So this was the week. I got 3 wins last week. Really, really good week. And I alerted all these in my Discord, by the way. So if you do want to get alerts and signals, you can get them below. So we open up. We've got our new week opening gap. We come up and fill the gap instantly. So I'm thinking, okay, we're pretty bullish. We've closed back over this. We've come up and then we get this swing down. Really obvious area of liquidity here. You can see, look how obvious this is. And then look at this really, really beautiful trade. Let me put this on replay mode so you can see it. So we come down, we hit the level. This is what I'm watching in real time. I'll click forward 1 candle on the 5 minute. Beautiful reaction. Look at this. Look at this candle. This is a perfect, perfect candle. And you can see we've formed now a really obvious 5 minute gap. We'll click forward again. Beautiful candle. Absolutely amazing. This is what you want to see. You've got your 3 candle pattern V shape with the liquidity sweep on the 5 minute. Such a high success rate on the 5 minute. All my trades last week were on the 5 minute. So you can see here you've got your 1, 2, 3 candles that form the gap. You've got yourself a beautiful candle that comes and closes above. I entered over like this with 2 or 3 micros, risking $200. And then obviously I'm looking to target 1 for 1. And then I'm just waiting. We come up, we come down, we come up. We hit my 1 for 1. Beautiful. Absolutely beautiful. So I take half my position off here. $100 booked. And then I just go break even on the rest, as you can see here. Really, really easy. Simple. Took about 20 minutes. Didn't even have to watch it. I basically just set an alert here. And then I saw that we came back over the fair value gap. So I entered. Waited about 20 minutes. Hit my 1 for 1. So I go break even on the rest. So I'm now at break even with $100 booked. I've got 2 micros for runners. We continue to move up. And then I'm just waiting to see how far we'll push. You can see we, over the course of, you know, this kind of lunchtime, you'd say in between, because I'm obviously from the UK, as you can probably tell. So this I would consider to be lunchtime between New York and London and New York open. London's at, is it 8:30 or 9? And then New York for me is at 2:30. So basically, you can see we had a bit of a period of just going sideways, and then we get another push. And then once we hit this second push, I started trailing another micro in profit. So I'm thinking I want to book some of this profit. So once we got to about a 3 to 1, I got stopped on the next micro. As you can see, this was a beautiful trade. I'm up about $300 or $400 on this already. And then I just have 1 more micro. And then if we just wind this on, you can see we chop around for a while. I'm thinking we're definitely going to come and hit these highs. And then with New York Open, we blast through the highs all the way to this external high. Absolutely incredible, incredible trade of about coming up for about an 8 or a 9 to 1 on the final micro there. Made about $600 or $700 per account on this trade, which is basically the maximum of the consistency that I can get. But overall, really, really fantastic trade. This was an absolute beauty, as you can see. So that was my first trade. Ended up making about $500 or $600 per account on that trade. Really, really good trade. Super easy. And then, okay, so I was thinking, okay, Monday was fantastic. We had a big, big pump on Monday. So Tuesday, I thought probably we're going to have a situation where we're just going to have a bit of chop. Because usually when you have a big pump one day, you get chopped the next day. But we actually had another good trade, which was good. So you can see here, I come into Monday, I wake up at I come into Tuesday, sorry. I wake up about 8 or 9, check the charts here. You can see we're kind of just going sideways. Really obvious accumulation. We're forming a really obvious area of liquidity from, you know, here, all the way down to, you would say, here. Lots of obvious liquidity that could get ran at open. We get the swing down at open, New York open this is, and then we swing back up. As you can see here, really obvious 5-minute gap. We obviously got a 4 candle pattern V shape here, which isn't as good. You can see we form the gap, and then it takes 2 candles to inverse, but still very high probability, especially with this momentum. You can see how big these candles are. I took this with 2 micros. My stop loss, I'm sized about for here, and then as you can see, we came up, smashed my 1 for 1. I started trailing 8 micro on this one because I didn't want to take all the position off at $100 here, because I was pretty confident with this momentum we were going to come up to this high. Once we smacked this high here, I took half my position off for about, what am I looking at here, $200. $200 profit on that first micro. I'm break even at this point, and then I'm just basically trailing in this second micro. I think when we got up to about 3 to 1, I closed this, and that was about $400 or $500 profit as well. A really good start to the week. So when I'm up about $1,000, I'm thinking, I'm being more cautious at that point, because obviously I've already had a really fantastic week. I don't want to be just throwing profits away. Wednesday was a weird one because it had FOMC in the evening, which meant that it was a really choppy open. As you can see, horrific price action here. Basically, got on the charts about 8 o'clock here. I saw all this really terrible, choppy, horrible price action. New York open, absolute trash. Look at this 5-minute. Up, down, up, down, up, down. Absolutely no clean delivery to anything. We grind to the downside. We're chopping around. We've got horrible PA. And then there was this absolutely ridiculous candle here on the 3-minute. I didn't actually take this because the stop loss was too big, and I could have only took it with like half a micro, which is obviously impossible with the risk tolerance I was looking to take. But you can see here, this was ridiculous. This was FOMC. We got the accumulation. Look at this manipulation distribution, absolutely beautiful. Huge swing to the downside, incredible momentum back to the upside. Really obvious fair value gap. This did get inversed on NQ. Obviously on MNQ here, this didn't actually inverse, but it did on NQ, which is what I do my analysis on, because NQ is obviously the one that you need to be analyzing on, not MNQ. MNQ has sometimes some funky price action, funky wicks, etc. But you can see, obvious sweep of liquidity, incredible momentum back up. But it's a 9 o'clock candle, so there's good momentum. You can see here this would have worked for a 1 for 1 as well if I'd have taken this, but I couldn't have taken it because it was way too big of a stop loss. And at this point, I was actually just chilling watching a film, and I missed it. I did have an alert set for somewhere down here, but by the time I got to the charts, it was too late. But I didn't really care because this was just probably too big of a stop loss for me to take. That was Wednesday. Thursday, I think there was a potential trade on Thursday as well, if I can remember. I find it so difficult because sometimes there's so many trades. Oh yeah, Thursday was the colossal dump. So we had this absolutely cataclysmic dump on Thursday here, as you can see. Pretty much no inverses. The 3 and the 5-minute here, you can see. Pretty obvious on these bearish trend days. When you put in like a 200-point drop at open, and then you start to consolidate, you're probably just going to continue down. Obviously, we've got huge liquidity sweeps. No need for me to tell you this. When we drop like, what is this, 700 points, pretty obvious that we're going to get ourselves some really obvious liquidity sweeps to the left. And then we did get ourselves a, I would say this is a suboptimal setup where we came up and we closed over a few 5-minute gaps here. But I felt like this would probably work. I didn't alert this in my Discord, but I did take this on a few accounts that I have that I just don't really care about, because I just thought this would probably work, and I was interested to see. After such a huge dump, when you get a really, you can see how like light bulb this candle is. It just pops up after all this bearishness. You just get this sudden pop up. I've obviously closed over a few gaps here as well, so you can define your risk. I took it with like 3 or 4 micros on some accounts that I don't really care about, that I'm just trying to pass. And you can see this one worked as well. The 5-minute time frame is undefeated. You can see there was absolutely nothing else here that you could have taken and lost on until this one. And you can see this would have worked. There was also I saw a few people who trade PM that actually took this tiny 5-minute here as well, which was a 3-candle pattern V shape. You got a bit of a retrace here and then a bounce. You can see this is just a very bad setup, but obviously worked as well. I saw a few people that trade like me taking this setup, and this actually worked, as you can see. But overall, you can see pretty much all these 5-minute inverses with liquidity sweeps that you could have taken would have worked. There's another one here that people could have taken. Actually goes all the way up to there, doesn't it? You can see obvious gap. We've come down, we've swept liquidity. This was an Asia session one, so I would have been asleep. We've come down, we swept this low, really obvious. Very bullish candle. This would have gone for a 1-for-1 as well, as you can see. And then it would have been a 1-for-1 and a break even, which is fine. And then there was a lot of chop in this area here, as you can see. Nothing really that I would have taken. There was no real liquidity sweeps until this one, where you could have taken this one. This one would have worked as well. You can see we swept this, all this liquidity here, which was obvious. None of this here had a liquidity sweep really. It was just chop, as you can see, so I wouldn't have taken anything. But you can see we've swept this liquidity into this gap here. Obvious and a really bullish obvious reaction. You could have entered on this candle here, as you can see. And then that would have gone for a 1-for-1, 2-for-1, 3-for-1, all the way to this high. I didn't take this one either because I wasn't trading really, because I was kind of done with this week after that huge dump. Friday was obviously trash, and that was it. That's all we've had for the past few weeks. I'm going to stop waffling now, and I'm just going to implore you to like and subscribe. If you want to get more information, do get it in the Discord down below. Sign up for the WOP. I do alert every single trade that I take, and I do alert them in live time. So make sure, if you want to get alerts or signals, as they're called by some people, in for my trades, which have had around a 90% win rate, I would say, over the past 3 months, even with the horrible price action that we've had. Please do go down below, like and subscribe. Let me know your comments down below. Please ask me questions. Send me messages on my social medias. Get involved, and I'll catch you in the next video. Cheers.